Alright, so we are live now on YouTube. We're going to be waiting a few more moments just so some people are able to come into the live, ask some questions, engage with each other, as well as me, I guess, in some sense. So we're going to wait a few more moments, but we will start this very quickly. We got a little bit of some economic data that came out for initial job loss claims. And then we're going to get into some details regarding some news stories that I just found that kind of create some sort of narrative or story. And then we're going to jump right into the charts for today. So let's get a recording. I think we've waited about a minute. And let's get this going. All right, going to get the recorder. Also, for anyone on TikTok as well as YouTube, if you do have any questions that you'd like answered, just drop them in the comment section below. We will be pausing the video momentarily between asset classes in order to try to answer any questions that are within the question section. So do not hesitate, and we'll try to get through this as in-depth but efficiently as possible. All right, let's get this recording going. Hey traders, hopefully you're having a great day. Got a little bit of risk off sentiment here, but first we're going to go over some fundamentals, some news, and then we'll get right into the video. Or right into the TA at least. So the initial job loss claims came out for the United States, and they were better than the forecast, but we do see the initial claims, which I'm looking at a little bit more in detail, is not really dropping too much. We are seeing a little bit of a move to the downside here, where the previous one was 18.76 million people still continuing to have unemployment claims and have unemployment insurance, carry them through the months. And then we see a little bit of a drop where it's basically 700,000 people who have gone back to work, it seems like. So it's a significant amount of people, but we still see that there's not that aggressive drop that we see in the initial claims. So this is brand new people. So we see that there's 1.3 million brand new people who are now looking for the unemployment insurance, but there is 700,000 less people who are actually continuing to take those unemployment claims or unemployment insurance. So obviously still increasing. A little bit of news on Warren Buffett here. Almost half of Warren Buffett's Berkshire Hathaway portfolio is now composed of a single stock, and we can see just right here Buffett's big bet on Apple. 43% of his portfolio is just in a single stock, and he has talked about how diversification is the protection against ignorance. So he does agree that diversification is not the best way to go, and he's really betting a lot of his eggs in one basket, which is Apple. So we'll see how that goes. He says it is one of the best companies or most well-managed, organized companies in the world. Something along the, it's probably the best business I know in the world is his quote that he said. So he is heavily long Apple. So we'll see how that goes. Next, we're going to look at some fundamentals that could drive the next risk off sentiment or create an environment where risk off is going to be somewhat the new norm. California and Florida hit new record for average daily virus cases as U.S. hospitalizations surge. And we can see the next post here. States with severe coronavirus outbreaks should severely look at shutting down, says Dr. Fauci. So we do see that obviously with the opening of the economy, with bars, restaurants, entertainment services all opening up, you are going to have increased cases. And we see that Dr. Fauci says that they should be looking at potentially shutting down yet again, which would obviously extremely bearish news and would probably provide a risk-off environment. But we don't see that just yet. Economies are actually not, or communities, states are not yet shutting down, so I think that the risk-on sentiment could potentially continue, but this is definitely a little bit worrying, and if the states actually take into action and try to shut down or limit the number of social gatherings, then that would obviously be a bearish news bearish news in some sense. So that's going to be a little bit of the COVID case discussion because it is rising due to the opening of the economy. So just something to note for the next couple of weeks and months here. And along with that, you do see the mortgages and the banks getting squeezed as well because people aren't normally working and getting paychecks and will not be able to pay their rent. And we've already talked about this multiple times. At the end of the day, the commercial banks are the ones who are probably going to get squeezed because if people can't pay their rent, people can't pay their mortgage, which then obviously who allows mortgages or who benefits from mortgage payments, and it's the banks, right? So if they're not getting paid, obviously the banks are getting squeezed. You can see empty Manhattan apartments reach record levels. So if people are unable to pay rent, obviously the landowners, the REITs, are not able to pay their mortgage. And obviously that's extremely negative for the banks. So we see another one here. More than 10,000 apartments were listed for rent in Manhattan in June, an increase of 85% over last year. The official vacancy rate hit 3.67%, but is far higher in many New York City buildings, according to brokers. And this is what we're going to be looking for, an increase if we do see this continue, if we see the rental and mortgage markets kind of deplete and there's less bids, there's less demand. You're going to see increase in non-performing loans, which are basically loans that are past due 90 days or more. We don't see much of a move from Q4 to Q1 of 2020, but I think the big movement in the delinquencies as well as the non-performing loans will probably be in the later half of this year because this is only a quarterly report, as well as the delinquencies for all loans for commercial banks is also on a quarterly basis as well. So I think Q2 and especially Q3, if it gets better, Q3 will probably be the worst, but if it gets worse, obviously the numbers will come out and the delinquencies as well as the total non-performing loans will increase. And we can see this big increase back in 2007, 2008 as well, or 2008, 2009, where the financial crisis was occurring. So I think that's definitely a potential. We don't really see it just yet, but we do have to consider that this is 3 months delayed. Quarter is a long time of data, and the next one's going to be coming here in a little bit, so it'll be interesting to see what we have. Got a little bit of questions within the TikTok comments, so we'll look at that, and then we'll jump right into the charts, looking at a bunch of different asset classes. All right, AJ says, hi, what are you trading here, stocks or Forex? So what we're initially doing here is understanding the risk tolerance of global investors by trying to understand either if it's a risk on or risk off environment. And with that information, we can use that to trade in the FX markets, crypto, equities, but the method that we use to approach the markets is looking at multi-asset analysis to understand which sort of sentiment the overall market is in. So that's what we're currently conducting right now. And then with that information, we can use to trade in the equities markets, mainly in indexes and futures or CFDs, as well as in the cryptocurrency market, trading BTC, but mainly altcoins because they are doing far better right now and have relative strength against Bitcoin. So hopefully that answers your question. Forget the cases. Market is euphoric. Risk off doesn't last more than a couple of hours, AJ says. I don't know about that. Assuming that you're going to have a forever bull run probably is not the best case. I've been pretty risk on so far, kind of since, especially when it broke past the 61.8% fib level. And since then, we have been pretty risk on. And cryptos have been doing really well so far, and we're not saying that it's a risk off just yet. We do have a pretty key level within the SPX at around 3120, which we are holding above. So it does look pretty solid in terms of the structure. We haven't broken down yet, so it's looking pretty favorable for the bulls so far. We haven't really made any major market structure move to the downside. So I agree with you in that. It's currently still a risk-on environment, it looks like, but we do have to be careful because it does look like we are slightly decreasing in the demand, in the aggression from the bulls and the buyers. So got to be a little bit careful, in my opinion. Less overall bullishness, But we are still holding that 31.20 zone, so we will dive in deeper and look into this price action a little bit more. All right, AJ says, forget the cases market is, or read that. All right, risk on all the way since March 18th. Mate, have never seen such resilience. Are you looking at just equities? Curious. I don't know about March 18th because March 18th was not yet the low. The low was March 24th. I don't know if you were going to call that straight the bottom, to be completely honest. That was extremely bearish. We had like GDP of contracting -5%, 7%, 13%, double digits in some countries. So I personally was not extremely bullish until we started seeing a little bit more of a recovery when we got that ascending wedge melt up to the upside. And especially, like I said, when we broke past that 61.8, I definitely became a lot more risk on. But I was not risk on in mid-March. Definitely not. If you were, you're kind of standing in front of a steamroller. But for the people who did buy at the mid-March lows, definitely did extremely well. But I want a little bit more conviction, confidence, and a little bit more dependability, but everyone trades differently. All right. Market is red all around today. We will look at the indexes a little bit later. We are just looking at the TikTok comments, and then we'll jump right into the global macro update and continue on. Come on, Dogecoin, just try it. Why not? I'm definitely not going to be looking at Dogecoin at all. Big pump and dump scheme. I'd rather look at some things that have a little bit more fundamentally driven information behind it, like Cardano with the Shilly project, and you can find a lot more in the crypto market update. So let's jump right back into the global macro update. We're first going to be looking at the S&P 500 starting from the daily chart. So we are still above this key structural support, which was a previous resistance at around 3120. And we are retracing back from that pretty big dump that we had a little bit earlier today. So we can still see that the buyers are coming back into the market, taking charge, still having conviction and confidence that the price is going to continue to the upside. And we can see back in early March, this was a previous level of resistance. Resistance now going to be level of support. And we also do see, if we just take a picture of this zone right here, we do see this anchor point at the very top of the all-time high, and then we see that lower high, and then now we're creating our third lower high. And we also see that resistance turn 1, 2, 3, and 4 levels of support. So right now I see a descending zone and an ascending zone squeeze the price closer together, and what we would be looking for in order to validate a potential breakout, where we would be looking at a potential extreme risk on situation, is if we break this, make a higher high, retest this previous resistance as a new level of support, maybe with a bullish engulfing candle or a wick hammer to the downside, and then once you see the momentum continue to the upside, that is going to be a really good indication that we are going to continue the momentum to the upside and continue the risk on sentiment. So we're looking to long things in the equities market and indexes. Crypto is doing extremely well. Things like AUD New Zealand for currencies are doing really well. And then the United States dollar is weakening, but although right now the DXY is getting a little bit of bids here. So let's jump into the smaller time frames here after talking about the daily chart. And there is that big sell-off that did occur, but we are seeing that buy pressure maintain the price above this key level of around 3160. So right now we're just consolidating, and let's just take a picture of this zone. We're just consolidating where we have a strong level of support right here, and we also have a strong level of support right here, and then we got our resistance right here. So right now we're just range bound, and I personally don't love range bound markets unless you are an intraday trader and you're looking at shorting the highs and longing the lows. That is obviously a very simple option that you could use, but right now I'm just viewing the market as a consolidation sideways where we have a key level of support, hold the price from making a lower low, and we also see a key level of descending resistance right here. So that's currently what I see right now. It could bounce a little bit higher, a little bit lower, but right now we are in a momentum to the upside, but range bound in consolidation. So unless we start moving to the upside, I'm going to continue this momentum to the side until we either break the resistance right here or the support. So we got a little bit of movement that we could be looking at. But overall, I do think that we're going to be contracting in volatility here for a little bit. And then obviously with that, we're going to get an expansion in volatility. But let's jump to the 1 hour chart and see what we can identify. So yeah, this support extremely well respected. We could draw a descending zone sort of, but not really. I'm just going to be looking at the market at a sideways consolidation, with this being a strong level of support where there's going to be buyers within the zone right around here. And then we also know that there's going to be a key level of supply right around here as well. So we're definitely range bound, just going sideways, and that's how I'm going to be viewing the market. Like so. All right, so I'm going to delete this. That was just for illustration purposes. And then let's look at some other assets. Got a little bit of stuffy nose. Okay, let's look at some assets to understand the overall risk sentiment, not just looking at the S&P 500, because that's only one of our charts that we're looking at. All right, Russell 2000. Got a little bit of a stuffy nose here. So the Russell 2000 did break below this key ascending zone of support. So the possibility of this head and shoulders is coming into fruition. Now we would need to see the break of the 1367 zone. So we need to see the price break this zone right here. And possibly it would be really nice to see a retest to validate this previous support as a new level of resistance before the next impulsive move comes to the downside. And that would be a really solid indication of a risk off move. But as long as the price stays above 1370, around there, I see the consolidation continuing. I don't want to be too bearish until we break the market structure low. And if we do, then we're definitely going to be shifting our bias. But for now, it's in a risk on momentum in a consolidation sideways. So the higher probable situation that the price will go, looking at the economic data that is coming out, as well as the overall stock market, looking at not just the US but the globe, I think the momentum is going to continue to the upside. But like always, things can shift and our bias will shift as well. The NASDAQ did move to the upside. It opened higher, moved back down, but it recovered now really near the high here. I mean, it didn't really test this zone, but I'm looking at this ascending zone connecting the higher highs as a potential level of support when we really even haven't hit that zone, unless we're really wanting to get a little bit more sideways, kind of like that. Then I guess we could say that we have used this as a potential level of support, sort of like here. Just maneuver that a little bit, kind of like there. All right, so that's going to be the potential level of support, although the NASDAQ is really, really strong. Definitely, if you're looking to long any index, the NASDAQ's definitely probably one of the top most relatively strong indexes in the market. Russell 2000 is definitely one of the weaker ones, but the FTSE is also extremely weak as well. But we'll get into that a little bit later. And then the VIX, the volatility index, did move to the upside, but it did get rejected by this previous support, which is going to be acting as a new level of resistance. So right now, the VIX is just contracting here. I do not have the brush. Don't know why that is not highlighted. There we go. So the brush, using the brush, we are contracting in volatility between a solid level of resistance and an ascending zone of support. So we're contracting in volatility. If we break to the upside and start trading within this range right here, that would mean it could potentially move to the upside, because this range was a significant drop. I was really happy when it dropped below this, because then it was decreasing the amount of volatility, which would then be a risk on sentiment. When you see the VIX dropping, that's obviously great for the overall S&P, because usually when the VIX is spiking like this, the volatility is increasing and the SPX is dropping quite aggressively. But when you see the VIX fade and just make slow lower lows and lower highs, that's a risk on sentiment, and you're looking to long things like equities. Crypto will probably be doing well, and it's a good environment for risk on trades. But as the VIX is kind of squeezing between the resistance and support, we're just waiting to see it potentially, hopefully, drop down. That would be the best case scenario, because then we can continue our bias for risk on trades. But if it does move to the upside, if this does break the resistance and form a potential new level of support and start trading within the 37 to 30 range, That'd be a little bit worrying because this PX is probably going to drop a little bit more. Might not want to be looking at BTC and alts for longs if it does really start to spike, but I'm really hoping that it kind of looks something like this, where you get a nice little ascending zone. Actually, what we're going to do is get the bars pattern. Kind of hoping it's going to be something like this. So if we get the bars pattern right here, and then we get another move to the downside. So we see this little uptrend right here. That's kind of what we see right now. And I'm hoping that we're going to get another fade. So the price is going to break the support and slowly move down, making lower lows and lower highs. And if this is the case, we're probably going to see the SPX hold the support and potentially even break this zone, or at least consolidate sideways, which then we could look for risk on situations, because if it's in a consolidation, the overall trend is to the upside. So I think global investors are going to be looking for risk on investments, trades that is going to give them a little bit more of a ROI or a potential ROI than things like cash or US bonds. So as of right now, the volatility is not yet broken our resistance, so we can't say that volatility is breaking structure. It's still holding our structural zones. So we're kind of at a midpoint right now, let's just say. All right. Quick discussion in the TikTok here. Someone says the app is being banned right now. Says he's saying it a lot. SPX is on a key level at the moment. I agree. If this breakout is to occur, then all-time highs, and this is what I meant. So you're probably thinking the descending zone that we talked about, the SPX. Yeah, could be a possibility. Usually if it breaks to 61.8, when you are seeing a massive sell-off and then a recovery past that, it has hit the all-time high. So historically, definite high probability, but I'm a swing trader. I don't like to look at like months ahead. It doesn't really mean too much to me. I'd rather try to understand what's happening for the next couple weeks and then capitalize on those opportunities. So in the short term, right now what the price action is showing me is just a consolidation sideways. We are still on a risk on environment, but the SPX specifically has not broken out. It's still consolidating. We failed to hit a higher high. We actually formed lower highs and consolidating at a level of support. So I agree with you in that if it does break to the upside, we will probably get a lot of demand coming in, a lot of FOMO coming into the market, and that will drive the price higher and higher. So I agree with you in that regard. And then someone says that TikTok is going to get banned right now quite aggressively. Hi, my smarty. Hello, Clement. How's it going? And Nick said, what is risk on or off? So it's a pretty good question. We do explain it really in depth within the Performante Premium section, but in short, why we're looking at so many different assets and conducting our multi-asset analysis is we want to assess the risk tolerance of global investors. So I view the world as like one giant capital pool of currency, whatever you want to call it, pool of money, right? And that flows from things that are safer, like cash, bonds, sovereign bonds that are issued, for example, by the United States. These are extremely safe investments, but they don't really yield any real profitable gains, really. Like if you're holding cash, inflation is going to slowly deteriorate your capital, but it's going to do it less than if you, let's say, invested at the high of the stock market and it's crashing 30%, like it did at the start of March, right? So if you're looking at it from just holding your value and keeping it safe, bonds and cash is going to be safer than what you call risk on current or risk on assets like the stock market. And I value Bitcoin as a risk on asset as well. So basically, when we're talking about risk on, risk off, is global investors worried, anxious, fearful? Or are global investors optimistic, hopeful, excited, and desiring higher, more speculative investments that could yield higher rewards for that individual? And that's what we're assessing. All right, so now that we've discussed that, we're going to now look at some global assets here. First, looking at discussing what this is. The top left is going to be the Japanese stock market, the Nikkei 225. Bottom left is the ASX, which is the Australian stock market. Top right is the UK FTSE 100, which is obviously UK. And then the bottom right is the DAX, which is a German exchange. So we see right now the UK's FTSE 100 is actually breaking a major structural zone. Let's actually open this up right here. We see a key level of resistance, support, support, and we are creating a series of lower highs, contracting the volatility, squeezing the price action closer together, and it does look like it is moving a little bit to the downside. I don't want to call this a breakout yet. We do have a candle closure below the zone, but it'd be nice to get a clear break below the zone, a retest validating the previous support as a new level of resistance, and then an impulse push continuing the move to the downside. That would be a really good thing to see for the bears in terms of the FTSE 100. But overall, looking at the rest of the equities markets here, a lot of them are not really seeing that sell pressure that the FTSE 100 is seeing. The Australian stock market is seeing a higher low, whereas the FTSE is seeing a lower low. The Japanese stock market is just consolidating, not really forming any higher high or low. Forming a little bit of a higher low, I guess you could argue, but not really forming any higher high, but still slowly moving to the upside. I guess you could argue this is a potential ascending triangle right there, but I'm going to view this as a consolidation until we see that nice big candle confirm that breakout from that 22K zone, 22.8K zone-ish for the Nikkei 225. Oops, don't want to be opening that. All good. And then finally, quickly looking at the DAX, did form a higher high and a higher low. So the DAX is slowly moving to the upside. DAX is doing way better than a lot of these other European indexes. And if you are investing in European indexes, I would say the DAX is a lot better of a choice compared to things like the FTSE, which has not recovered nearly as well compared to the DAX. So overall, other than the FTSE, it's still holding really well. The FTSE is weakening, and the FTSE did not rebound nearly as well compared to a lot of these under other indexes. So kind of makes sense that if there is going to be one that's going to weaken, it's going to be the FTSE, and we're seeing that right now. Don't want to call it a breakout just yet. We've already given the criteria in which we would then call it a breakout because we are seeing a retest, impulse move to the downside, and that's what we classify a potential validation of that resistance. All right, so that's the global equity market complete. We're now going to go into the US dollar currency index as well as a quick look at some bonds. But first, we're going to look at the TikTok questions here. So Nico says, makes sense, thank you, no problem. And user says, any trades today or tomorrow? So I'm already in silver and some alts here. I will talk about it when we get into the metals market, but yeah, I'm already in silver. I got in silver a little while ago, and it's holding up pretty well. We'll see how it goes. Gold took a bit of a dump today, but we will see. We'll get into silver and gold in a little bit later in the video. Eric said, TikTok is down. Just letting y'all know. I currently have TikTok still open, and there's still people viewing, so I don't think that TikTok is down from my end, but maybe you are seeing something different. Montana said, any tips on buying stocks pre-IPO? You really got to make sure that you are knowing what you're getting yourself into, because if a stock is pre-IPO, it means that it is illiquid. It is a private placement in which you don't have any liquidity unless you can find yourself a buyer, but I don't think that pre-IPO company will help you out with that. So you have to understand that if you are putting money and parking it within this pre-IPO, you will not be able to sell your shares. You can't liquidate until it becomes an IPO. That's about all the information I can give you. Best of luck. All right, so that's the TikTok comments. We're going to jump right into the US dollar currency index, which is kind of like a Euro USD inverted chart because this is 60% Euro. And let's take a picture of the 4-hour chart. So we initially had this ascending zone right here. We were holding this zone right here. So this was initially an ascending wedge to the downside. And then we got our nice little target from this zone right around here. So it was kind of supposed to be making a lower low. So we have not broken the structure yet, but the fact that This move happened right here. I thought it would be a pretty swift move for the downside, but we're seeing a little bit of hesitation. That's not a problem, but that major structure was this zone right here. Just wanted to indicate that. And what we're seeing right now is within the move to the downside, within the series of lower lows and lower highs, we're seeing a small either descending wedge or descending channel where we see a resistance right here that was extremely poorly drawn. We see this resistance right over here connecting the lower highs, and we see this previous resistance turn new level of support multiple times, and then we're just seeing it bounce off of resistance to support. So we're nearing a key level of resistance, which is in confluence with the previous high right here. So it does look like we are going to be nearing a level of supply for the US dollar currency index, which would probably be moving the price down that way, and that would probably be in confluence with the SPX going up if that is the case. But if the overall stock market is going to have a massive sell-off, that's a big if, but if it does, we're looking for a recovery within the DXY, and we're looking for bids to go into the US dollar. But as long as the risk on environment stays and the overall equities market, crypto market, and things are doing well, I expect this to continue to the downside, maybe even break the lower lows and really capitulate to the downside there. But as of right now, we're just holding a descending channel, and if it breaks this resistance, I'll be a little bit worried, but we do also have that previous support that's now creating our new level of resistance. So the main zone that I need to see the US dollar currency index hold below is 97. As long as it's holding below 97, I consider the US dollar currency index to be still weakening, and the momentum will probably continue to the downside. If it goes above 97 and holds it, that might be a time when I might be a little bit worried. I might be looking at the market in a more risk-off sentiment, or starting to, or at least looking for opportunities that will provide exposure to risk-off gains if that is the case. But we don't see that yet, so we're not going to be diving too much into it. But I do want to be looking at the market in both longs and short, risk off, or risk on, risk off, because you never know what's going to happen in the markets. You never know when you're going to want to be putting on a massive risk off trade in case the SPX does a huge dump to the downside. Everyone's selling their stocks, gold, silver, cryptos, all liquidating. This is what happened in March, right? And what went up? The only things that really went up were the Japanese yen and the US dollar, primarily the US dollar relatively stronger than the Japanese yen, right? So that is, in my opinion, the world reserve currency is the safe haven currency when there is major fear, uncertainty, worry within the market. If gold was it, if Bitcoin was it, you wouldn't see them absolutely capitulate, in my personal opinion. Gold is more of like a monetary worry, a monetary uncertainty, where if central banks are printing a shit ton of money, I think that's why gold's doing really well right now. The United States has printed like 16% more in terms of the monetary base, which is like an exorbitant amount. But that's what they're doing, and they're debasing the currency, devaluing it, and their money proliferation is the goal in their eyes, from the outside, what it seems. Hopefully the audio is still there. It says the audio is gone, but I really hope it is still there. Let me know if the audio is gone for everyone or if it's just for Montana. Truck Nubs also on the YouTube, morning, afternoon. How's it going, Truck Nubs? Happy that you are here today. Got 5 people on the Discord, which is awesome. So that's the DXY, just in a descending channel. We've talked about this quite extensively, and not much more to discuss other than just patiently waiting to see what happens. Now we're going to be taking a quick look at some bonds, both 10-year and 5-year yields. So when bond yields are dropping, it means that global investors are coming into the market, into the bond market, which is dropping the yields. So we saw right here, when the bond yields are dropping, people are going into bonds. And we know that bonds are an extreme risk-off asset. So if you see this drop, if you see the yield drop, there's less incentive needed in order to attract investors to invest their money in bonds. So that's why when you see yields drop, you know that people are rushing into it. And when you see yields rise, you see there's more of a need for incentive for investors to put their money in bonds. So right now it's dropping, so it's a little bit of a risk off because people are moving their capital into bonds, but it's not like it's an absolute move to the downside yet. We're just consolidating. The 5-year is potentially making a new low, or at least testing the previous low, but the 10-year is definitely far from that zone. So audio seems fine. Might just be you, Montana. Hopefully you get that figured out. Raise your volume on your phone. I'm not exactly sure. But that is going to be the bonds and the US dollar currency index. We'll actually take a look at some FX markets as well today, looking at what currencies are doing well, what currencies are not doing well, and that gives us a little bit more understanding of the risk on sentiment. So let's first look at Western Texas Intermediate crude oil, because we're going to be leaving the metals for last. So we were looking at this at a daily chart. Let's just take a picture and discuss this in a little bit greater detail here. So we have these series of candle closure right here. 1, 2, 3. So we do have a support right here. So I'm not going to be assuming that it is going to be moving to the downside just yet. But we do see that there is a decent amount of sell pressure coming into the market, which makes sense. We did get a little bit of a sell-off within the SPX, which is a risk on instrument and asset. And crude oil as well, right? When you see crude oil go up, there's demand for oil, there's production uses oil, transportation uses oil, and overall economic activity increases with the use of more energy, obviously. And then when you see energy decrease, obviously it's a risk off. When you saw crude oil basically go negative, that was when the lockdown started. And really, if there's no economic activity, if no one's moving around, transporting, driving, all that stuff, obviously that's very bearish. So we see a little bit of a sell-off here coming in the crude oil markets. Let's dive in here. A daily chart doesn't show us a whole lot. We see a lot of resistance around the $40 mark. Let's just put that a little bit more red. So we know that there's a lot of supply around here. Let's jump into the 4-hour to see if we did break below. So we did look like we did break below that ascending zone. We will want to see a confirmation where we see a minor level of support get tested for a new level of resistance. Probably going to be here for the first one. We'll see if it tests that zone and respects it. And then we also got some other ones. It's not ideal because we see incrementally, incrementally higher lows. But that's going to be the first retest zone. If it starts moving to the downside by validating this as a new level of resistance, that would definitely give me a little bit of indication that we are starting to enter into a risk-off sentiment. And that would be a very different environment in what we're currently seeing right now. So what are we looking for? If we're looking for a move to the downside, we'd ideally like to see a retest, which you're currently seeing right now. But in an ideal world, let's just get this right here. So we're seeing that zone. That's potentially the situation we're going to have. Is we're going to move to the downside, pull back, retesting the previous support as a new level of resistance, and then moving to the downside. And then what we see on the daily chart is this zone acting as a strong level of support. We see lots of wicks to the downside here. Let's get our brush. It's currently still not highlighted. So these wicks right here to me indicate that there's a lot of buy pressure around the 36 mark. So if the price does move to around the 36 mark, I'm going to assume that there's going to be some level of sensitivity. There's going to be buyers looking to enter. It doesn't mean that it's not going to pass, but because of that, I'm going to be looking at this market in a range-bound market. So unless it breaks a major structural high, which is around $41, let's say, and closes above it, or if it breaks $36 and closes below that, I'm going to be viewing this market as just a sideways consolidation. So a potential volume distribution phase if we are going to break to the downside, or a reaccumulation phase if it does continue to move to the upside. Don't want to call this 100% a breakout yet until it starts moving to the downside and starts the next impulsive move to the downside. But if it holds this zone and kind of recovers back up that way, we could then continue into the range of the ascending wedge, and then we'd have to adjust this ascending trend line a little bit, but I don't want to be too early. I don't need to be the very first one to be entering in a new trend. I just want to be making sure that I know the trend, and then I'm continuing the trend as long as it's going to persist in that intended direction. So that's a little bit of crude oil, a little bit of move to the downside. I'd be a little bit hesitant, but as of right now, I don't really see anything worth discussing that we haven't already talked about in WTI crude oil. Audio is fine. Just quickly looking at the TikTok comments here. TikTok going through a huge glitch at the moment. I currently don't see it, or they're getting shut down. Yeah, we will see. I currently don't have any problems with it, but hopefully, if anyone does have any problems, they can still go on. Um, I'm just gonna keep on recording until something happens, and I do these every weekday. Just letting you guys know. What is a significant bottom for you on the market? What is a significant bottom for you on the market? I'm not sure which market you're talking about. Please let me know, and I can go in greater detail, but I'm not sure which market you're talking about. Uh, no likes on vids, notifications disappearing. Wow, okay, so yeah, on your end, it does definitely seems like TikTok may be getting shut down, which is obviously not great. I do like TikTok quite a bit. So it's a little bit unfortunate, but that's just how life goes sometimes. All right, quick look at the gold and silver chart here. So we hit the minor level of support at around 95. When we do go back on the daily chart, we can see it was a previous level of resistance, now acting as a new level of support. So that was the original target for this ascending wedge, which it did hit. I would like to see it go a little bit further. We are getting a little bit of a rebound ever since gold and silver did make that sell-off. So when this is moving up, usually gold and silver are both moving to the downside. Whereas if this chart is moving down like we saw here, silver is absolutely booming and gold is either slowly moving to the upside, or consolidating. So you need to see gold go up or consolidate for silver to have the ability to move to the upside. Just taking the sweatshirt off here. So then what we're seeing right now is a bit of a move up. So we did recently see gold and silver get a bit of a sell-off. I'm still in silver. I'm still holding. But if it does break this 97 zone, it's going to be a little bit worrying because that's the current market structure resistance that we're holding below. I would really like to see that price hold below the zone. And if we're going to hopefully get another sell-off, it'd be like something like this. That would be a really good situation for us to be in. But right now, we're testing this zone, and I'm just being a viewer of the gold and silver ratio, and we already have our trade in silver. So in my opinion, there's not really much for me to personally do right now by just looking at silver, right? Other than that, I don't really have any trades in the metals market. Gold does not look phenomenal in my personal opinion in terms of a long. I think silver has a better structure for the price action on the 4-hour chart, as well as the larger time frames. We've got a massive impulsive push to the upside, very, very tight contraction and volatility where we're squeezing between higher lows and lower highs. We get a first impulse push to the upside. We got a test of the previous resistance, which is acting as a new level of support. That was our entry point. And then we got our impulsive move to the upside, which now at this point, we've just completely eliminated risk off the table. So we are risking absolutely nothing on this trade, and we have exposure to the upside as long as the momentum continues, and the target's going to be around 1950. So that's going to be my silver trade. It's looking pretty good. We've been following this for a while. We called it out when we did enter. We called it out throughout this entire day, every weekday. So we are going to just hold on to this and see what it does, basically. All right, let's go to the charts here, or the questions here. No likes on vids. Yeah, we already talked about that. Ask. This guy has no idea what's going on right now. I very much disagree with you. If you give me your opinion on what's happening, then I will give you mine. And we can compare, contrast, and see what your thesis is on the market and see what my thesis is on the market. And go from there, right? Everyone has a different way of approaching the markets. Everyone has a different way of creating a structured method of navigating the financial markets. And just because you may look at a single 5-minute chart and assume that you know what you're doing, maybe that's not going to be the case for everyone else. So I appreciate the constructive criticism. I do take that pretty well in terms of constructive criticism, but I might have to disagree with you on that one. So let's now go into the crypto market update after we've completed the global macro update here. Not a whole lot more to talk about within the assets here. Nothing really has moved. SPX is holding, which is great to see. And not much more to talk about here. All right, so we're now going to look at the price of BTC. We're just going to be showing the altcoin analysis and the altcoin market cap update for the Performante Premium members, but we're just going to be looking at BTC here for the crypto market update. So like I said, we did get a pretty big sell-off here. Makes sense because the SPX and BTC is positively correlated, around 0.20 positive correlation. So they're not extremely correlated, like for example, the SPX and the Dow Jones, but they're still positively correlated, right? So we see that move to the downside, holding previous resistance support as a new level of support. But if you're in the cryptocurrency market, I personally would not be looking at Bitcoin. I'd rather be looking at alts that show strong relative strength. In my personal belief, they've been doing really well. The total to the chart that represents the altcoins, so the cryptocurrency market excluding BTC, is moving to the upside, broke that previous resistance zone, now acting as a new level of support. So we're making higher highs and higher lows. And we also see the BTC dominance chart move to the downside as well, which is showing that BTC is weakening and losing ground compared to these alts that are doing really well, appreciating to the upside. So alt season is definitely still present, and I'm still going to be looking at the altcoins for continuation patterns to the upside, but we will not be looking in depth at those because that's just for the Performante Premium students. So that's basically the crypto market in terms of the other indicators that we're looking at. And then for the volatility is still dropping for BTC, which is what we're looking for because we want to see extreme low volatility in order for us to breed and create extreme high volatility. The last time we've had extreme low volatility was in fall of 2018, in which we went from 6K to 3.2K. And then the next time we had extreme low volatility, we went from 4.2K to 14K. So these contractions in price action movement and contraction in volatility creates an environment in which there's an expansion in volatility, and then we will look for continuation patterns to trade with that trend in that parabolic move to the upside or downside. So that's the outcome that we would like to see within this trading range that we're seeing right now between like 10K and 8.5. I'd like to see it go tighter and tighter and tighter until we're at a point where we're at an extreme low volatile point. And then usually we get a massive move to the upside, some continuation pattern. We're looking for wedges, triangles, channels, and then we get the continuation of that momentum, and that is where we're wanting to capitalize on that nice entry. So I'd like to see it go a little bit deeper in this zone in a perfect world. So just deeper into the funnel, and this is the apex right here. And ideally, we'd like to see it go even further into it, so that would be reducing the volatility. So we will be notifying everyone if and when this does break to either the upside or downside. I'm going to guess it's a little bit more to the downside, but we will let the price action speak for itself. We're not going to try to put too much of a bias onto the market. So that's the overall crypto market update. We could go into the smaller time frames for BTC, but I'm not really interested in BTC right now. Like I said before, because the altcoin market is doing very well, I would rather stick to the altcoin market than to try to trade within this tiny range by using significant leverage, because as it gets deeper into the tightening and the consolidation, it's going to get more noisy and your risk reward is going to get smaller and smaller and smaller. And that's not something that we want. I'd rather have a high risk reward once it does break that zone, because you have a high probability of the momentum continuing. All right. Do you know about how TikTok seems to be shutting down? TikTok is going down. Can you please stop? TikTok is going. Yeah, so I'm basically, why in the world would I stop this live? Kind of doesn't really make sense. If TikTok is going to shut down, me being on the live or not on the live is not going to stop them from shutting down any user. So just enjoy it while you have it. Don't really be worried. It's just one of the social media platforms that you can use to, I don't know what you all like to do on social media, but share memes. I don't know how old you are. I don't know if you guys are into trading or anything, but there's positives and negatives for social media, and if TikTok goes down, there are other alternatives, so it is okay. What software do I need to see charts like you on monitor, and how many monitors do I need? From DE. So, good question. I would say, how many monitors? Okay, so for your first question, this is called TradingView. This is a free platform that you can use. It's a charting platform. I pay for it as a subscription to get more options and to do more with it because I obviously do this for a living. But if you're just starting to understand how to read charts and navigate the financial markets through price action, TradingView is by far my most favorite application, not just for trading, but really in life, to be completely honest. It's not even comparable to the number 2 charting software, in my personal opinion. TradingView is the best charting software on this planet right now, in my personal opinion. So if you're going to use anything, TradingView is your best bet. You can also attach your broker if you'd like, and set up different lists, and there's so many things you can do with it. So I highly, highly recommend TradingView. And for the monitors, you can really just use a laptop to start off. I currently have 4 monitors. I got like 2 main charting monitors, and I got my execution, YouTube, fundamental analysis, and then one that's like just for like news related, like Reuters and all the different news stories and economic data that's coming out. So I have a lot of information that's coming at me, but for a person who's been doing it for 3 years, I can pretty well easily understand what's going on in terms of like the charts that I'm looking at. But I would say if you're just starting out, all you really need is one monitor. And you can split up TradingView to have multiple charts in one screen, so it's really helpful. Yeah, a lot of people are talking about how TikTok's going down. Holy shit. Can you please stop? TikTok is going down. See, I don't really understand why I would stop if TikTok is going down. That makes 0 sense. Um, just talk to us. No charts. TikTok is gone, dude. No, don't stop the lives. I'm confused. I'm saying please just talk to us one last time. Well, we do have a YouTube as well as an Instagram as well as a Discord. So if you like our content, if you like our information, we do provide these exact same structured videos on our YouTube every single weekday. So we do a global macro update and a crypto market update every single weekday, Monday to Friday, around, let's say, 10 a.m. to 2 p.m., depending on how many videos we do and how long the videos are, because some people ask questions, some of them there's no questions asked. But yeah, we do this every weekday. So if you like the content, if you like the structure of how we create the videos, definitely check us out on YouTube. I don't think that YouTube is going to be banned anytime soon, although they are shadow banning some crypto accounts. So we also go on LBRY as well, which is like another decentralized social media platform, kind of like YouTube. It's like YouTube, but decentralized for people who are interested in crypto and blockchain to some degree. It's interesting. All right, so that's basically complete for the global macro update. Why not? Let's just go into the FX markets. So we already talked about the DXY. We already talked about the weakening dollar that's currently in the markets. And what we're going to be looking for now is potential strength. So this is my relative strength and weakness, I guess you could say, indicator. This is for my risk on currencies. So I look at Australian dollar, CAD, New Zealand, GBP as risk on currencies, obviously. And then I look at CHF, Euro, JPY, and USD as risk off. So on at the top, off at the top. And what I like to do in terms of structuring pairs is I like to look for highly negatively correlated pairs. So right now, let's just look at it right now. If you kind of zoom in and out to change the time frame, we see that GBP is doing really well. GBP is relatively stronger than a lot of these other risk on currencies. We also see, if we do zoom back a little bit further, New Zealand and Australia is not doing too bad, but GBP is definitely the clear winner in kind of the more recent kind of week or handful of days here. Now zooming out and in on the risk off currencies, we can see that the US dollar and the Japanese yen is the weakest, with Euro and CHF as the strongest. So what would we be looking for if we are in the FX markets? Well, we want to be looking for longs in the strongest pair and shorts on the weakest pair, ideally, right? And if they continue the trend, well, then you're going to have things that are going really high up, you're longing, and things that are going really far down, shorting. That's You want that if you're on the FX market, right? So instead of just randomly opening up a chart and just saying your USD is all I'm going to trade, yes, each pair has their own characteristics and you can create your own method. Some people only trade one pair. Like some people only trade GJ, so GBP, JPY, and that's all they trade. They trade nothing else. And that's a system, that's a method, right? But if you're looking for trend continuation patterns and you're looking for strong movements and strong trends with high asymmetric risk rewards, I think that pairing the strongest and the weakest together and using that as your trending pair that you're going to be looking at is a really powerful way to try to follow the trend. That's what I'm not a reversal kind of guy. I'm a trend follower and I just like to follow the trend. And this is the way of finding solid trending pairs in the FX markets. You can also put like minor or even exotic currencies like the Mexican peso, the South African rand, the Russian ruble, all that stuff you can put in this as well, and then you can long and short them, although you do have to consider the carry costs. So if you have a huge discrepancy between interest rates. Like the South African rand has like a 5% interest rate or like 4% or something like that. Whereas if you're, let's say, pairing it with the United States dollar, it has like 25 basis points or 0.25 interest rates. So depending on if you're long or short, you may have to either pay or you may get rewarded due to the carry cost, positive or negative carry. So just got to take that into consideration. Um, yeah, if you have any questions, there's 37 people on this TikTok. I think this is one of the highest points of a crowd, I guess you could say, I've ever had on TikTok. I think 52 is the peak I've ever had, and that was early on. But that's basically it for the global macro update and the crypto market update. We talked about assets across the board. We looked at equities, not just US equities like the Nasdaq and the S&P 500, but we also looked at global equities like the ASX for Australia, the Japanese stock market, the FTSE 100, which is the UK. We looked at a bunch of different equities. We looked at metals, we looked at bonds. We looked at a bunch of stuff, and I hope you got something out of it. I definitely tried to make it easy to understand and create the information in a digestible way that makes sense to people who might not understand it. And that's kind of the goal. So I'll keep this live running. I don't really have much more to talk about, but if you have any questions involving economics, finance, crypto, trading, investing, just side note, I don't really trade in the equities market for single equities. I mainly look at the futures of indexes, so like the S&P 500. I'd rather just look at the index future instead of like the ETF when you're trading in the equity markets. And why is that? It's because I have more liquidity than the equity markets in futures, right? So if I only have 6.5 hours a day to trade, that means there's the majority of the day where I don't have liquidity and I can't get out even if I want to. Whereas if I'm trading in a future market, I have the ability to look for opportunities when the market might not be open for entries, or even more important, I can get stopped out if the trade goes against me and I don't need to worry about gaps. And that's the main reason why I like to have the majority of my trading in either 24/7 in the crypto or 24, I guess 6 or like 5.5 within the futures market, or CFD's contract for differences, which are kind of similar to futures, except they don't have any delivery. So like if you're trading a futures contract for gold, you could get delivery of gold, but if you're trading a CFD, you'll never get delivery. When you said tie my broker to it, how do I pick one? Is it TD? So DE, how do you pick a broker? It's a tough question because there's a lot of options and it primarily depends on where you live. And that's probably the biggest component of what broker you choose, and what you're wanting to trade, obviously. So if you're wanting to just trade equities and if you live in the United States, you have TD Ameritrade, you have like Robinhood if you're wanting to be a little bit less professional because they don't allow some orders that I believe, I've never used Robinhood, I live in Canada, but It depends on what you're trading. So if you answer what you're looking to trade, if you're looking to trade in the futures market, if you're trading crypto is a little bit challenging for America. You could use Binance Futures, which allows you to trade in the altcoin market as well as BTC with leverage. So that's a really good option. It also has a decent amount of volume and liquidity. So you don't have a lot of slippage. You don't have crazy spreads between the bid and ask for, for like smaller alts. So it depends on what you're trading. Paul says, "What's happening with Dogecoin?" Dogecoin. In short, I don't know if it was TikTok that started it. It might have been TikTok that started it. But basically, there's a trend on social media that someone started that says if everyone buys $25 worth of Dogecoin, everyone will be rich. Who bought Dogecoin? Um, in short, it's a pump and dump scheme where I'm sure there's a lot of people who started the trend who bought Dogecoin very early at a very low price and wanted everyone in TikTok to buy $25 worth of Dogecoin, which would appreciate it. And then the people who started the trend would then sell it before everyone else, making huge gains. And then all the novice, rookie, noob traders who are in when the price is already pumped 100%, those are the people who are going to be left holding the bag. And I really hope that everyone watching this who is maybe already in the pump and dump or has Doge, consider potentially looking to sell it near the highs or when it's up, because I think it will inevitably absolutely dump to the floor, and that's not a fun situation to be in for anyone holding the bag. So, yeah, I wish you the very best for anyone in Dogecoin. I would not recommend trading it or anything. Like the fundamentals, it was a meme to start off. There's like no developers actually working to make it better, right? Like there's like Cardano, Ethereum, Monero, all these projects have developers, have people working on them to make them better. Dogecoin is a legit meme. So I personally would never even touch it with a 10-foot pole, but everyone has their way of navigating through the markets. D says Houston, Texas. So he's from Houston, Texas. So yeah, if you're trading in, for example, equity markets, you got many options. You got TD Ameritrade. You got Interactive Brokers. You got Binance Futures, Binance US Futures for crypto. And that's kind of everything you need, right? You got FX, you got commodities with Interactive Brokers, you got equities for TD Ameritrade. If you want free commission, free trading, I don't know if you can actually link it up with TradingView with Robinhood, but that's an option as well. But definitely do some digging around and some due diligence with what brokers will provide you good liquidity, good volume, but also will give you competitive fee structures, because some will give you some pretty expensive fees, and if you trade with them for a while, it can really eat into your profits. Especially if you're like short-term intraday trading, then you just get wrecked. What program is that? So what we're looking at right now is TradingView. So this is the TradingView platform. I have multiple monitors to look at it, and we just did a global macro update. If we're just zooming in, I'm currently in silver. Let's see what I'm at for risk. So I'm at like a 1.82 risk reward, and the high was around, let's say, just under 3. And my ideal goal would be 4.66 in terms of the risk reward that I'd be looking for, which means if I risked $1 in that trade, I'd be making $4.6. If I risk $100, I'd be taking home 466 if I win. So risk reward is very important. Win loss is very important as well. Got to find those dependable trades that give you skewed asymmetric risk reward while giving you that dependability that you're looking for. Is the main game of trading. Definitely. All right, so I'm just going to close some tabs here, see if any other questions are coming on the YouTube. Not really. So don't really have much more to discuss here, but if there's more questions, I'll be happy to answer them. I'm currently already in the trades that I'm wanting to be in, so I don't really have much more to do other than just make a video, practice some paper trades, test some stuff for new strategies, and then go biking a little bit later today, because that is my plan for the day, is test some stuff, make a video. I'll have to timestamp it. I'll have to make a new thumbnail for this. But yeah. Anderson says, how do you start? It totally depends. It's a super broad question. Are you looking for passive investments for the long term? Are you looking to make this a career by swing trading or day trading, by like really, really putting in hours, sweat equity, and time to learn? Passive investing is a lot more easy. It's a lot easier. It's just you look for, low cost ETFs and dollar cost average if you're like long term investing in equities. Um, but yeah, it's a pretty difficult question to answer. How do you start if I don't really know what your end goal is at all? So maybe if you give a little bit more information, I'll definitely help you out, give my 2 cents. I'm not a financial advisor. I cannot give you a financial advice in terms of how to set up your life financially, but I'll give you my 2 cents on what I do and some tips and tricks that I've kind of done to help me grow a portfolio in the financial markets. So, yeah, definitely drop that in the comments if you wish to learn more. How much is Bitcoin? And if it's too expensive, what's another option? So, for Bitcoin, you can buy like $1 worth of Bitcoin. Bitcoin can be divided into 8 decimal places worth. So, you're probably thinking Bitcoin works similar to a share. Like, unless you're trading on Robinhood where you can split shares, you can only buy a single share of, for example, Tesla. You can't buy a quarter of a share of Tesla if you only have like a couple $100 or, $500 to your name. You can't buy a single share of Tesla, so you buy half a share or a quarter of a share or like 10% of a share of Tesla. And a lot of people think Bitcoin is the same. You can only buy one Bitcoin or you can't buy a Bitcoin. But you could buy $10 of a Bitcoin. You can buy $100. You could buy $1. You could buy really any amount of Bitcoin that you would like. So you could buy 0.00025 of a Bitcoin and hold that in your ledger for an extended period of time and grow that to whatever it's going to grow to. So it's not like you need to buy one Bitcoin or you can't have one. You can buy fractions of one, and that's very helpful. And that goes with any other cryptocurrency. You don't have to buy one Ethereum. You can buy 0.0172544 worth of Ethereum. You could buy whatever amount that you want, and that's very, very helpful. What do you trade? So I trade cryptocurrencies, I trade FX, and I trade metals. I sometimes trade the S&P if it really shows me a good opportunity. But that's basically all I trade. I'll trade in the FX markets, I'll trade in the crypto markets, including alts and BTC, and I'll trade in the metals. And I'll sometimes fiddle with the S&P, but I don't trade oil, I don't trade the Russell 2000, I don't trade the Nasdaq, I don't trade bonds or yields or anything like that sorts. Um, I look at a lot of them, but that's just to understand risk off, risk on. I have $1,000. Will that be a good start? I would say starting with no money and paper trading is a good place to start. It depends on what you're looking for. If you're, long-term investing using ETFs that have low fees, any amount of money is a good place to start. And then you slowly dollar cost average, so you're not putting your entire chunk of money in like at a single point. You are, let's say, putting $50 bi-weekly or $50 monthly or whatever you feel comfortable with putting in the markets. That is the long-term dollar cost averaging method that a lot of retail investors use to slowly build wealth over time in the equity markets. You could also, like, if you're just sticking with equities, pick single companies. You could, like, if I was in the equity market, I would prefer the Nasdaq over the S&P personally. Why is that? Nasdaq is outperforming the S&P for years and years and years. So why would you be in the second tier index when you could be in the best index in the entire world, basically? And that's the Nasdaq. So that is my 2 cents in the equities market. C. Becker says, do you have another channel on TikTok? I do not have another channel, but I have, we're a team, it's not just me. So the Performante team also has a YouTube channel that is also conducting the exact same live. So you can check out our YouTube, and then we do the exact same thing, except not on TikTok off a phone, but we project our entire monitor onto the live. So it's a lot more clear, it's a lot more crisp. You can see everything that I'm looking at, and it's a lot easier to understand what's happening. So if you are trying to follow us, and if TikTok is getting banned, I would highly suggest looking at our YouTube and Instagram, because we do provide a tremendous amount of information there as well, absolutely for free. So definitely check that out if you are interested. Just looking at our Discord here. Wow, yeah. So TikTok is, yeah, there's some shit going down for sure. Wow. So we'll see. I currently have this running, so I don't know what's happening on the other side of TikTok, because I'm just looking at the screen, obviously. But yeah, TikTok definitely seems like there's some shit going down. We've already talked about TikTok potentially getting banned by the states due to information getting leaked or information getting sent back to China or some shit going down. So if it does inevitably end up that TikTok will be banned by America, or at least North America, or America, at least North America, I don't exactly know if Canada is going to be going about doing things, because it primarily was America that was worried. And as a Canadian, I may not be getting that same level of aggressive banning from the United States as a lot of you may be facing right now. So we'll see. Muska says, are we talking about stocks today or crypto? So we talked about both today. So we just finished the global macro update and the crypto market update, and we're just keeping the live on, answering any questions, just letting people know what I see in the markets, and just having a discussion, having a good old discussion on this lovely Thursday morning. But I don't think there's anything really else to talk about here. I kind of went over everything I need to, went over the FX markets, went over all the other asset classes, did our multi-asset analysis, and I think the time has come to end this TikTok. So I'll leave it up for 5 more minutes. If there's any other questions, I'll be happy to answer them. But if there's nothing really else interesting to talk about, I will close it and I will start to conduct the video for the Perfect Monday Premium members. So don't really see anything coming. I'll wait a few more minutes. But yeah, interesting news about TikTok getting banned. That is for sure. Some people within our Discord is talking about it as well. Anyone's TikTok being weird. My inbox is completely gone. If I look up people's profiles, all their videos have 0 views. And TikTok started to delete USA accounts ahead of USA banning it. Okay, so that may be the case. I see all the comments, but every video I see says 0 likes. A nice first like. Wow. Yeah, so I'm Canadian, so I may not be impacted as much as Americans, but time will tell. So thank you very much for watching. I really appreciate the engagement, lots of talking and lots of discussions today. But that will be the end of the video. So thank you very much for watching. We do this every single weekday. So if you are watching on TikTok and TikTok somehow gets banned in the entire North Americas, then we will be conducting these and continuing the global macro update and crypto market update on YouTube every single weekday. So thank you very much for watching. Just letting you guys know. And until next time, have a good one.